Hey guys, Mike here. So I hope everybody had a great Super Bowl Sunday. I decided to take the day off and just relax and enjoy Super Bowl parties, okay? So I'll put a lot of the stuff I would put in Sunday's video into this video, and we'll do it a little differently because tomorrow we got something very big coming up before the market opens, so the market will definitely react off of this news. And also we'll go into some charts on semiconductors just to show you how, if you think it's crazy now, show you how crazy it really can get, and we'll go over a few other things as well, especially when it comes to small caps and IWM. But just getting right into this, guys, you can see tomorrow is core inflation rate month over month, year over year, and CPI, of course, which is the headline. And so they're expecting a big difference as far as the forecast of 2.9% for the inflation rate, and then core they're expecting to go down to 3.7. And when you look, just if you're looking at a few charts here of where this thing's been heading, right? So there's an updated disinflation forecast, and then this is Goldman Sachs versus the actual. And so you can see, it's coming down pretty heavily. This is their forecast right there. And so we'll see if this continues to trend or not. So far, they actually had it not coming down as fast, but it came down even faster than what they thought it was going to come down. And there's a few things affecting this we'll talk about. And then we look at the core PCE year over year percentage change versus the 6-month annualized change right here. You can see it's come down pretty rapid. I know people say, oh, there's no way it's come down. I know what you're saying. We've had this conversation before, but the data they're giving us is showing that it is coming down. Really hadn't hit where they truly wanted to hit yet. And then you got the Fed funds rate. It's above where they want core CPI. If you look in the past, this goes back to 1982, I believe, right here. You want the Fed funds rate above this. And you remember when core was way above the Fed funds rate, and this is one reason they hiked it up so fast. Now they have it above it, okay? And so you would think it would slow down the economy, and it is in some parts, just not in others, because here's the housing market. This is the best chart of all, and this is where you're seeing a lot of the data because the housing market is broken, right? So you see PCE for housing, and then you go over here what core PCE is, and then if you take housing out, right, it will be lower by almost 0.5% right there. And when you go in the past and you can just look to the left, you can see where, normally, yes, how PCE for housing is higher than what core normally is. But on average, going from 2014 over, what we were used to is maybe a % difference there. And now it's a much, much larger percentage difference. That's 3 to 7, so 4% difference. And so that's a big difference. So again, I don't know how you fix that. We've talked about it. Let me know in the comments if you know how you fix without a recession. I don't know. I don't get it just because of the supply and stuff and something we've just never seen before. Now, looking at us, right? What are we doing? We're spending on credit cards. We're spending on, buy now, pay later programs. And you can see, obviously, that contributes to this as well. And so normally, yes, this is above where core normally is, usually 2%, right? And now we're still sitting around 3.2, 3.3, somewhere in there. And so, of course, we're going to get more data, not tomorrow. I believe it's going to come out the next day on how we're spending and stuff. And it's not like we're spending cash. We're just running up the credit cards, right? That's what we're still doing here. You can see there's a big difference in where we're spending at, where CPI is at versus in the past, right? And so these programs are helping delay the inevitable of getting CPI down. And the big concern, of course, is with the government doing what? What are they doing? They're putting more money in the economy by doing what? They're going to say people under, I think it's 50, 60,000, whatever it is, which is a whole boatload of people right in the country, by the way, are going to get to retroactively get more money for having, obviously, the dependents and stuff, right? On the child tax credit, it's going to go back to last year, 2023's taxes. So that's going to be billions coming into the economy. It's going to get spent for sure. There's no doubt about that. It's not going to get saved. So it's going to go into the economy as well. How's that going to affect things? That's what we're going to get to find out, right? How's the Fed going to react to that? And so, it's like the old, I guess the guy who's sitting in that fence right there I've showed you guys before, and there's a flood, and he's just bailing water and throwing it over a chain link fence, so it's just coming back in. That kind of what this is looking like. And we'll see how the Fed reacts. Again, that's what was so weird about the market reaction today and what was really pumping hard today, because we know the rate hikes have been pushed down, right? And so we'll see if this is a false pump or not. But, understand real quick before we get into that Seeking Alpha still is going to be doing this sale until February, was it 14th, Valentine's Day, I believe. And again, if you go through the portfolio here, you'll get some experts that run this portfolio, and they'll shoot you out the picks. You can see some of them right here, like SMCI. You'll get detailed rundowns of these stocks sent to you, so you'll get to understand why they're buying or selling. Again, you'll get the emails for the buy alerts, sell alerts. You'll get to actually go on conference calls, webinars and stuff to see what they're doing, why they're doing it. And it's going to be a whopping $89. So initial price there. So go ahead and jump on that. Just hit the link down in the bottom of the description if that interests you. Now, when you look at what was pumping today, it was weird. It was rate sensitive stuff, right? Real estate, utilities, energy, small caps, biotech, right? All the things that just been getting beat down over the last week or whatever when they found out we're not doing these rate hikes and stuff. Well, that was actually what was leading the market today, which is kind of strange in a way. But again, that's the kind of market we're in. And you can see that we talked about this, was it Friday, I believe it was, busted out, continued this move up, mitigated that 4-hour fair value gap right there. You can see that's the 2023 high right there. And right below it, if we put it in here, you can see there's a weekly target right there. And so we'll go over that in just a minute. But you still do got your bullish MACD across. RSI is looking good on the daily right there. You can see right below that 2023 high, we have the weekly range, which we might end up breaking about 204.34. And I actually put this in the Discord because, man, this right here looks identical, doesn't it? You got Wyckoff accumulation, right? It's where it sells down, ends up getting stuck in a range and all this good stuff. Don't worry about all the letters and the phases. That stuff, if you want to go read up on it, go read up on it. And then you come over here to IWM and you go, wow, it looks pretty close, right? We've seen this with NVIDIA and others, right? And so you kind of look at this and it's like, okay, then you got distribution, you got accumulation. This is the one that's still way down from its all-time high. And so we'll see if this continues to go up. Now, again, watch AMD because we talked about this one, I think it was Thursday or Friday too, had a false breakout today, right? And then came right back down and it's just wedging. So it's got maybe 1, maybe 2 more days of that, probably tomorrow, which will make a decision which way it's going. And AMD obviously has had many explosive moves on the way up. And when it moves, right? It's got the trend line right down below with support as well, which was the previous all-time high. But you can see, especially here, I took these out. It was in here for months for you. But again, when it was wedging down, exploding, wedging down, exploding, wedging down, exploding. And so, we'll see how it plays out on this one. But, right now with semis being so freaking frothy at this point in time, we're just going crazy. And I just like to pull the moving averages up every once in a while to look at how far above they are. It's kind of like a runaway Mac train right now. You can see, obviously, SMCI, I know everybody's been talking about that one. That one's going through the roof. One of our members actually explained why that was or posted something about it. Now it makes a lot more sense why this thing is going absolutely insane. But to show you how crazy this can get, this is what somebody posted, and I looked at the charts and everything. This is the real deal here. This is Cisco back in the dot-com bubble, right? And then to the right, you have NVIDIA. And then there's that white line right there, and that was before the huge breakout that NVIDIA had. And you can see how similar these charts are starting to look, and I kind of drew it out and said, well, this thing could go to 11, 1200. What's crazy, people are buying 1100 calls, and they're making 100% less than 24 hours on them. That's how insane this thing is getting up there. And I'll show you a chart to show you, though, it's not as expensive as you think it is when you talk about PE ratios on this one. Might surprise you which one's still the most expensive, right? Now, Tesla, I thought Jake here did a wonderful job. Somebody sent this to me, and this is what I was talking about with these MACD crosses, the RSI going above 30-31 area. You can see the percentages when this happens, but he did a great visual on this. So I was like, why should I do it? I'll just give him the credit and show you what he did here. But you can see that's where we're at now. Looks a lot kind of like this one maybe. But you can see the MACD crosses. You can see the RSI right there where they bottomed out. Now, again, of course, that would be great. But I knew last night as soon as it came out that what they do, they cut prices again. And so when this comes out, I was surprised it held up as well as it did for as long as it did. I don't think it went down until like after lunch. And so I was surprised it was green at all this morning when that came out, because usually that also people start talking about margins and everything. But what's crazy, and I think one thing going against Tesla too, is when you look at this, when you look at the PEs of all the mega cap, like the Mag 7, Mag 9, whatever you want to call them, Mag 4, Tesla's still way up there, more expensive when it comes to price to earnings. And there's NVIDIA right there. So NVIDIA is a lot farther down. And then you look at like Meta, look at Google way down there. And so sometimes that comes into play. Like people look at that. And so when you're looking at, okay, what's priced into this? Are we still doing robo-taxis? Are we still doing all this other stuff? Are we still cutting prices even more? Now you're trying to gain market share, but you're squeezing your margins, all this stuff. Then this does come into play. That's why I'm just making you aware of it. And the fact it's been that major sell-off and it's still that far above all the rest of them, which is kind of nuts when you think about it. Now, PayPal, the big thing, look at this one's going to be that trend line and that 200 moving average. If this continues to move up, that is, okay, because they have been an absolute trip hammer for the sellers to come in, just keep beating this one down. And so those are two big things to look at right there. And, when you look at this right here, I bet you if I draw a line of why it stopped here, because remember, it was just falling. It was like, oh my God, what happened? I bet you if I go through each one of these time frames here, I'm going to find a fair value gap, an imbalance of the buyers and sellers somewhere, and there it is. If you see a sudden stop like that and a reaction like that, like a big bounce, like a rubber band bounce, you can almost bet money you're going to find one of these right here where it just mitigated an imbalance and took off. Now, of course, the big reason that happened was Jim Cramer happened. Because he came out when this thing was falling, and then when it bounced on February 9th and said, hey, Cramer said you should be worried and that today's move is an opportunity to sell a little. And of course, what happened? It went up more after this. We'll see if it continues to go up, but that's, again, the old algo kicked in and said, oh, Jimmy's bearish, we're going bullish, right? And so, another one's going to be Palantir. Obviously, what's this one doing? Right now, it's just kind of consolidating right there, which is a good thing because it's had a big move up. This one right here also. Why is it kind of stagnant there as well? Because it's sitting in this fair value gap, this daily fair value gap, you can see with an RTH gap right above it. Okay, so if it can get through this right here, there's an RTH gap right above, and so you're targeting anywhere from 26 to 26.75, I believe is the target right there. But just let's see if it can get above this fair value gap right there, or it's going to react down some. But accumulation is actually a good thing. Consolidation, okay? Not bad at all. And I'm going to draw this trend line right here. So if it does move down, because normally you have a downward reaction off fair value gap or an imbalance, you can get a bounce right there, which puts it around 25.50, I believe that is. And when it comes to more earnings, I mean, you're going to have some high beta stuff, man. Tomorrow morning, Shopify, Datadog, Coca-Cola is not high beta, Biogen is. Then you'll have Marriott. And then in the afternoon, you're going to end up with Airbnb, Upstart, Robinhood, Lyft. So all those are high beta. And then Wednesday, let's look out for Kraft Heinz. These are the kind of stocks that hadn't been doing well because it has to do with the consumer. Sony, we'll see on that one. Then you'll have Twilio or Twilio, however you pronounce it, Oxy, Cisco. Fastly is another one to watch out for. Upwork as well. QuantumScape, that's about as high beta as it gets right there. I forgot that one was even still in business. Thursday, Crocs, John Deere, look for Yeti as well. DraftKings, Coinbase, Roku. I mean, this is a list right here. Trade Desk, Applied Materials, DoorDash. And then Friday, I don't really see anything that's going to do anything with the market. And then Wednesdays, where I talked about Tuesday, you're going to end up with PPI month-over-month final. That's really all that's going to matter. You have a bunch of bond auctions taking place and a bunch of Fed speakers taking place as well. Thursday, all the jobs data is going to come out. A lot of manufacturing data coming out, which nobody seems to care about. At least the market doesn't care about it because it looks horrible lately. Then you're going to have retail sales month-over-month, year-over-year. They're actually expecting a decrease, so the bar is low on this one. And then when you come out, again, 4-week bill auction, 8-week bill auction. And then, of course, more Fed speakers coming out. And then Friday, you're going to end up with core PPI month-over-month, year-over-year. And then PPI month-over-month, headline that is, PPI year-over-year, Michigan Consumer Sentiment, a bunch of more Fed speakers coming out. And so we'll see if they keep towing the same party line about, well, it's too late to cut. We got to get the data. We're data dependent. Maybe May, maybe June, blah, blah, blah. All that good stuff. So that's what we're looking at. But, no earnings is going to shift the market or anything, but just a lot of, we'll expect some big moves up or down in a lot of these, because a lot of these have ran big time since their last earnings. So we'll get to see what happens. And I know when it comes to anything to do with semiconductors, especially after SMCI, and then what was the other one, ARM, I believe, like everybody's buying YOLO calls way out of the money and stuff, trying to get one of those 55,000% returns. And you never know. Usually you only get one per earnings season there, but let's see if we can get some multiples going on. So anyway, hope you got something out of it. Hit that like and subscribe button, guys. Really appreciate all you guys watching, and I will see you tomorrow.